Let's get more on the trading day with David Rovelli. He is the managing director of U.S. equity trading at Canaccord Adams. David, I think this is the first time I've had you on the news set here, right?
Yes, it's the first time.
Okay. So aside from that, the jobs data, my God, down 11,000. You expect a rally of what, about 1% or more, or what do you think?
Yeah, the big number on the S&P is 1112. We've stopped there the last few times we got there. We actually crossed it on Tuesday, I think, and then it went right back below. We need to go through 1112, and we need to go through on volume, and then the next leg up should be to about the 1140 level.
Well, what do you think about this report?
I think it's great. I think I've done your show a million times in the jobs report. I think that's the first time in a while you've used the word less. So that's a good sign. You know, I want to read the birth-death ratio numbers, look at that, see how many jobs the government added for seasonality. And also, I'd like to see, you know, how the market reacts today. You know, we're going the right direction. It's a trend now. The trend's going the right way. The only thing I'm a little nervous about is if the economy does start to pick up, all the people on the sidelines in the new year are going to probably start looking for jobs again, so they'll be back into the report.
Does this tell you, though, that, and I know you're not an economist, but does this tell you that the way you're trading, at least, that the economy is going to be is going to rebound a bit stronger than expected? Is perhaps that double-dip recession not exactly in the cards anymore with this? I think
with how the economy is going to react, it's all up to the government and the Obama administration. If they raise taxes, you know, they're talking about a war tax, and I'm all for supporting our troops. I'm, you know, pro-American, support the troops. But if they're going to put a 4% war tax and they're going to add 4% to the Bush tax cuts reprieve, there's no way the economy is going to get out of this hole, because you raise taxes, it just comes right out of GDP, and you know, and that's bad for the economy.
Okay, so how do you trade all of this then?
What I would do is right now I would probably be in big growth dividend stocks, you know, large cap, you know, Verizon and AT&T. If you notice yesterday when the market sold off, all stocks went down. You saw Microsoft was still up in the day. If you want to play tech, everyone's gravitating to stocks like that just because people have such huge gains for the year. They're not going to let any like glitch in the economy or anything like the Dubai situation ruin their year performance. Like, why, if you're up 30%, why give back 5%? Lock into 30. So what I would do is I play big cap to the end of the year. If we do go through 11, 12, if we do close above it on volume, see, that's the problem. There's no volume.
I was just going to ask you about that. Volume has been key.
It's scary.
And it's not coming back. It hasn't come back. What's going to take it to come back?
Well, what's going to take it to come back is you're going to need the small investor to get back involved in the market, and you're also going to need these funds to get heavily involved. And that's another thing you talk about. You know, they talk about high-frequency trading. Imagine if we didn't have high-frequency. I'm not an opponent. I'm not a proponent. But imagine if we didn't have it. Where would the volume be then?
So you're making the liquidity argument then?
Yeah. Well, I'm trading. The volume hasn't been this bad, I'd say, in 2 or 3 years. It's horrible. I mean, and only see volume in like a Bank of America. If you took out the big stocks on the big board, there would be zero volume. So I'm just saying that, you know, I want to see a volume spike. I want to see a close.
But you talk about the retail money. I mean, it's on the sidelines. There's still like, what, over $3 trillion in the money market funds or something like that. They're waiting for what? They're waiting for what exactly? In a nutshell.
They're probably waiting for to probably see the jobless rate come a lot lower than 10%, first of all. And then second of all, they're probably waiting to see, you know, what happens in the beginning of next year. So what I would like to see is a big volume spike, a close above 11.12, and you probably see 11.40 your next stop.
Okay. David, good to have you. Thanks for stopping by on Jobs Day, and we'll have you on the next jobs report as well. So,
Thanks a lot, Patty.